Hello members, I want to do a quick review here of a Costco trade, a bad trade, a trade that I actually have traded very badly. Because you can learn from the bad just as well as you can learn from the good. In fact, learning from the bad sometimes is even better than learning from the good. So let's just go over this trade and what was happening. First off, it was a range back when I got into this trade, and so the range was up here. You could probably draw it like that. It's probably a decent, captures the majority of it. You could even go inside of it, somewhere in there. If we go back and look at the actual price points where I bought this, those price points were, let's see here, Costco, looks like August 5th, and the price points, excuse me, let me redo that, were 166 and a quarter, or 167.5 it looks like. And it's on August 5th. So on this day, so kind of in the middle of the range. So that's the first mistake, right? At that point, if you look back, right, you had this swing point low, that swing point high. You had a little range starting to develop here. You tested down the downside, had tested in this bar. That would have been the bar actually to buy if you're going to buy this range, but I didn't. I bought up here, and so I didn't get a great entry to start with. So then it goes sideways, and then we start to get a breakdown over here. Now we break this swing point, so let's point them out as we go. We break this swing point on this transition here on this big bar down. Volume doesn't escalate, doesn't look bad, and it looks okay still. But then the very next bar, you break this one. Now you go to bearish, and volume escalates a little bit more. Still not huge, but still a little bit more. Now you're coming back into this support bar. And at that point, I was looking at this and saying, okay, so it's expanding the range a little bit. You're coming into a huge support bar. We should probably be okay. Go sideways a bar, and then you get deeper. Now, when you're looking at a big bar like this, right, this bar, the trade shouldn't trade more than a third of the way into this thing. And so, anything from here up is probably still okay. In other words, you're not going to try to seek the bottom of it. But, as you get down into this area, it's starting to get kind of dangerous. And you've already come out of your range. You've already broken 2 swing point lows. At that point, I probably should have cut some of this, in retrospect. And the other thing that's going on is not just this time frame. Of course, we're looking at the intermediate term time frame. And that intermediate term time frame is seeing that rollover as well. At that price point, we're right in here. So we're already starting to see it. We haven't gotten back to the bullish retest regen zone yet, right? But we have enough evidence that this thing's not doing exactly what we wanted, and we probably should have cut our exposure some as a result of it. So that's the first mistake. Now the second mistake is just associated with what happened on this bad news that came out and pushed this down. So when we got this bad news, now what do? We test the lows and we test it on volume. So volume over here, let's get the volume numbers, 6.4 over here, it was 6.0. So even though it wasn't enough to blow it out, it was certainly enough to catch your eye. And so you trade into this low, right, get underneath it, right, and you have volume expanding, not as quite as large, but still large. And at this point, something's wrong. And not only that, you get some fundamental news that tells you it's wrong. As soon as you get that, as soon as this happens, right, you either got to cut out of this bar or you got to take the first bounce. And that bounce actually gave us a good exit. Take that first bounce and get out. In other words, just dump the position, be done with it. Because now that it's traveled farther down, right, and we've ridden it all the way down, this is a horrible trade I'm making. At this point, the best you can expect is here again, right? So now not only are you going to get the same price point you would have got if you just got out, you're going to get it some number of days, weeks later, maybe even months before you get back out of this and all your money's tied up in it and you have all the the angst of having to deal with it this whole time. You just cut the loser, forget about it, right? Move on to the next one. You want most of your money in stocks that are winning, and you want to keep your money out of those that are losing. When they start losing, when they're not doing what they should do, then you need to exit the position. And so at this point, we're kind of stuck in something. We don't want to, dump it down here for, $5 less than we can get. But we're going to have to sit here and nurse this thing forever now. What's the best we can expect now? Well, what we just showed on the daily is probably the best near term. On the weekly, there was a bullish retest regenerate. It got under it, back over it now. If it can stay in here, we can probably get towards the top of that, which is that same area we were just talking about. And so that's probably the best we can expect. The problem is if we go now back down to this view, the problem is on the way up now, you're going to have huge resistance right here. So we may not get there. In other words, we may at best get up into this area and then stall and not quite get back up here. So as we get there, we'll have to measure it, decide how to get out of it, right? Do our best to cut the losses at a little bit better price point than they are now. But the big story here is you break 2 swing points. You didn't get a good entry to start with. You break 2 swing points. You should have cut some of it there. Definitely should have cut it here, right? Just cut it all out. Instead, we're in a trade now that we've got to hang on to and try to get back out at a little bit better price than we are now. And we run the risk of even more bad news coming out, right? This thing could give us even more bad news, and we'll pull the monthly over. If it were, there's nothing to keep it from going into this big bar, this wide price spread bar here. And so that's another, what is that, 148? We could drop another, that's 147.5. From the current price point, we could drop another $5. So you can see how these situations can get worse and worse. As a matter of fact, this thing on a long-term time frame, this still could be bullish as far down as here. And that, I sure as heck don't want to be sitting in this that long. So that's Costco. That's the dissection of a terrible trade. But we learn from all the trades that we make, good or bad. We just need to go back and review them and ask ourselves, what are we doing? Why did we do it? What are the rules we should be following that we're not? And I think I laid out a couple there. Thanks.